Today, we're diving into what accrued interest is and how it works in the world of bonds. You'll learn how interest payments are structured, why you sometimes pay more than the bond's face value, and what actually happens when you buy a bond on the secondary market. Stick around to the end so you don't end up losing money thinking you're just paying for the bond itself. Don't forget to like and subscribe to support the channel. Imagine you're renting an apartment, and on move-in day, you're asked not only to pay for the upcoming month's rent, but also to cover some heating costs that have already built up. That's kind of how bonds work. Accrued interest is like a debt the new bondholder owes to the previous owner for the time they held the bond and earned interest on it. A bond is a debt instrument. The issuer, whether it's a government, a corporation, or another borrower, raises money from investors and promises to pay back the face value on a set date. In the meantime, it pays regular interest, called coupons. If you buy the bond when it's first issued, it's simple. You wait for coupon payments and receive them in full. But when you buy a bond on the secondary market, things change. From the day after a coupon is paid until the next payment date, interest builds up inside the bond every single day. That's what we call accrued interest. When someone sells a bond, they don't want to give you part of that built-up interest for free. It was earned during the time they held the bond. So as the buyer, you compensate them for it. You pay more than the bond's market price because the accrued interest gets added in. Join our Telegram channel where we post updates about new videos and articles. Links are in the description or pinned comment. Now you know. The bond price you see on the exchange isn't the full amount you're going to pay. But why is the market set up this way? The answer comes down to logic and fairness. I'll explain where that accrued interest really goes in just a bit. Let's crunch some numbers. Say we have a coupon bond with a face value of $1,000 and an annual yield of 8%, with coupons paid out every 6 months. That means the bondholder gets $40 every 6 months, half of the $80 paid per year. Now imagine you buy that bond 3 months after the last coupon was paid. You become the new owner, but there's only 1 quarter left until the next payout. Still, on that date, you get the full $40. That might seem unfair. You only own the bond for half of the period. That's where accrued interest comes in. When you buy the bond, you're paying the seller not just the price of the bond, but also the interest earned during the 91 days they held it. In other words, you're reimbursing them for the interest they already earned. The calculation is easy. Take the yearly coupon, divide it by 365 to get the daily rate, then multiply by the number of days since the last payment. In our case, $80 per year divided by 365 multiplied by 91 days, about $19.9. That gets added to the price you pay. Why does this matter? Because when the next coupon is paid, you'll get the full $40, but nearly half of that is just what you prepaid as accrued interest. In effect, you're just getting your own money back. When you check a bond price on the exchange, you might see something like 100.5%. That means the bond is trading slightly above par, but that's not all you're paying. You'll also see the accrued interest and the total amount of the transaction, market price plus interest. In our example, you pay $1,005 for the bond itself, plus about $19 in accrued interest. That adds up to $1,024. Why is it set up this way? Because it's fair. Whoever held the bond should get their share of the coupon, and you, as the buyer, will get that money back later when the full coupon is paid. You're not losing anything, but you're not gaining more than your share either. Here's the interesting part. If you sell the bond 2 months later, you get the accrued interest from the new buyer. So, in a way, you're collecting interest in advance. That's what makes bonds appealing for short-term strategies. Just remember, accrued interest isn't a bonus, it's a prepayment. Then comes the big day, the coupon payment date. Everyone holding the bond on that date gets the full coupon. And here's where it gets interesting. Even if you bought the bond just 1 day before that date, you get the entire coupon. Brokers track who owns what on a set date, called the record date, and those owners get the payout. Let's say you buy the bond the day before the coupon is paid. Yes, you paid nearly the full coupon amount in accrued interest, but you also get it back the very next day. It's basically just transferring money from one party to another. After the payment, everything resets. Accrued interest goes back to zero. A new coupon period starts, and interest starts building up again, day by day. This cycle repeats until the next coupon payment. At first glance, it might seem like the new owner of the bond is making all the profit since they received the full coupon. But that's not true. The system of accrued interest ensures the income gets split fairly. The previous owner takes their portion when they sell the bond. The new owner pays for it up front, then receives it later as a full coupon. So income gets distributed evenly among everyone who held the bond during the coupon period. This protects investors and prevents market manipulation. Without accrued interest, someone could buy bonds a day before a coupon is paid, collect the money, and sell right after. The market wouldn't allow that. In reality, accrued interest is just honest bookkeeping between the seller and buyer. It turns a basic debt instrument into a flexible financial tool, allowing you to buy or sell at any time without losing income. First of all, liquidity. You can sell your bond whenever you want and get your money back without losing the interest that's built up. That doesn't work with bank deposits. If you withdraw early, you often lose your interest or get a much lower rate. Second, flexibility. You can sell a bond on the secondary market for a profit if interest rates have changed. That means you can earn extra from price movements. With a deposit, you only get a fixed interest rate, nothing more. Third, accessibility. The barrier to entry is often lower with bonds than with big bank products. Through a broker, you can buy a bond for $1,000 or sometimes even less. That makes it easier to start small. There's a new article on our website. We've got free resources for investors of all levels on stocks, bonds, and ETFs. Check it out and bookmark it for later. Fourth, freedom with timing. Deposits are locked in. The longer the term, the higher the rate. But with bonds, you decide how long to hold. Sell in a month if you want, or keep it till maturity. So in the end, coupon bonds with accrued interest aren't just a financial tool, they're a reliable bridge between protecting your money and growing it. They give you flexibility, predictable income, and let you exit early without losing cash. When you buy a bond through a broker, you'll see two lines in your statement, the bond price and a separate line for accrued interest. Make sure you factor both into your calculations. Don't think you got a great deal just by looking at the bond price. Check the total. Many brokers don't charge extra fees for secondary market bond trades, but you always have to pay accrued interest. It's not a fee or markup. It's a fair system for splitting income among all players. Accrued interest also plays a role in taxes. In some places, you can deduct the interest you paid when calculating taxes on your coupon income, which can lower your tax bill. Always ask your tax advisor about this. Missing these details could cost you just because you filled out a form wrong. Even when buying a brand new bond at auction, if you weren't there on day one, you might have to pay accrued interest from the start of the offering to your purchase date. This is standard, whether it's from a private seller or a government issuer. It ensures interest income is split fairly based on how long you owned the bond. Hit that like button and subscribe. You can also support our content creation on our membership platform. Link is in the description or pinned comment.